Good morning and welcome to my third webinar series, the final installment of my three-part webinar series, starting a farm from scratch. Whoever hasn't done this yet, the concept is that you have driven into a random valley. Your car has broken down and you realize that it's absolutely beautiful, and you want to grow food there. You want to farm there. So basically, part one was actually kind of finding land and easy ways to find land. Uh, Part two was just a little tutorial on irrigation. And so we did that tutorial on irrigation, which was basically to kind of almost like a mental exercise to kind of get you in the right direction in drip irrigation in terms of what you need. And now part three, this is a part that's very near and dear to me. Intro to business planning. Specifically, what we're doing is a cash flow projection. The difference between a lot of things between the cash flow projection and cash flow and older cash flow from, like, say, last year is a projection is the future, and that's what we're going to try to help you guys understand. After you find that wonderful valley, you find good soil, you find good water, you know you have access to markets, and now you want to find out what your expenses and income is actually going to be, or at least get a realistic projection of what your income expenses are going to be, and find out how much money you might need to borrow. So technical stuff, you guys already saw that slide. Homegrown by Heroes, I already gave that spiel. Homegrown by Heroes. Definitely look it up. It's a great way to add value to your product and or the perception of value. Perception is everything. When people know that they're buying from a veteran, then they will buy more. Okay, who am I? I was participating in Operation Iraqi Freedom in 2003. After that, I got out of the Army and became a Peace Corps volunteer and worked with sesame growers, basically growing experimental millet and then trying to market sesame oil. So that was pretty fun. For the last 8 years, I've been the owner and operator with my wonderful wife, Lily Schneider, of Shooting Star Organic Farm, formerly known as Shooting Star CSA. So we've been doing that for 8 years. I've got 10 years of farming experience to include stuff I've done kind of in the private world, aside from my own business. I grow organic vegetables. I have a BS in business management, and I'm almost done, cross my fingers, with my master's in international agricultural development. Cash flow. Basically what I have here is a picture of the aging yet still immensely entertaining Axl Rose, to refer you to Welcome to the Jungle. Sometimes when people do bring up the idea of cash flow, like me, I tend to be a tractor guy. I really appreciate tractors, and I've often done a lot of the field work, but field work really won't get you anywhere without getting your finances underway. There's a horrible saying out there that the easiest way to make a small fortune is to start farming with a large one. Now, the person who created that saying did not do this particular cash flow, and I just want to put that out there. If that person had gone through this cash flow spreadsheet and figured out their operating expenditures and operating income, then that saying would never exist. So objective of the cash flow is to understand how much money you need, say, from a bank or lender, or how much money you need to lend yourself the first few months of the year or the first year. Show investors you know what you're doing. That's a really, really big one, because if you walk in trying to get a loan and they ask you about expenses, specific expenses, or your overall expenses, and you don't know what you're talking about, then they're not going to see confidence. So this is really just an exercise to make you more confident in your operation and more realistic of what it's actually going to look like. Decide if your operation will generate enough income And that's a huge one. This is going to help you see if the model that you have actually will make money. And after you reconfigure, you realize that, let's just say you want to get in one particular production of one product, lavender or whatever, and your numbers don't pan out after you've cut expenses and kind of increased ideas of income. If at the end of the day your numbers don't pan out, well, that's a sign that maybe there's something more profitable to do. Decide which expenses are necessary and which are not. This cash flow will get you a little bit closer to that. Maybe it will help you more just understand not necessarily which expenses are necessary and which are not, but which expenses are really setting you back, and how much you're going to have to change your operation in order to keep going with that particular expense. So the idea is you don't have to be freaked out like Axl Rose, and it's, we're going to change it from welcome to the jungle to this is something you can do and you can figure out. And in order to keep everyone calm, I've introduced calming pictures throughout this spreadsheet, this PowerPoint. Okay, and just remember, every great task is a series of smaller tasks. We would not have made it to the moon, right, if people hadn't woken up and put on socks and shoes in the morning. So every single thing you do is a series of smaller, more simple tasks. So sometimes it can feel daunting and feel overwhelming, but if you record what you do and bring it into smaller tasks, especially in budgeting that you're going to do. Another thing I would add to that is every single event in your life can be quantified in a dollar amount somewhere, some way. I believe I can do that. Cash flow. So in order to understand the cash flow, which I hope you guys have downloaded, and if you haven't downloaded it, there's a materials section, and you should download a cash flow spreadsheet, or we have a link for a nice little website for you guys to pick it up off of. So cash flow, step one is understand the components of the cash flow worksheet. That's what we're going to do. Step two, learn how to use the cash flow worksheet. And step three, of course, go make some money. And so hopefully you're going to be doing some skiing in your vault like Ebenezer Scrooge. I feel we've been working with a lot of people, and the joke is I'm kind of thinking like Ebenezer Scrooge to try to help people save as much money and not lose money as much as possible throughout their operations. So there he is. Terminology. Operating expense is an item that is used up the same year purchased. Okay, so fertilize, packing supplies, gasoline, motor oil, anything that you're going to use up that year is an operating expense. It's really important to think about the difference between operating expenses and capital expenses. This capital expense is something that will last, I would say, at least 7 years. Example would be a tractor, fencing, metal tomato stakes, or barns. Anything that's going to stick around that you're paying for is more like a capital expense. Something that you buy that first year that essentially you are not going to have to keep buying year after year. The whole point of that is you don't want your operating income to be greater than or to be less than your operating expenses, and we'll talk about that. And as you can see, we have a picture of a happy farmer with a saxophone, and I just like that picture, so that's why I put it there, and I'm just going to stick by that. The major components of the cash flow worksheet are the savings, which is right here. I'll go to the point. In fact, here we go. I've got my little red pen. Oh yes, I love the red pen. Okay, the major components are the savings account right here, the checking, business checking account right here, non-operational sources of cash, which is borrowing. So that's where any money that you get into the business from loaning essentially from borrowing from the FSA or family members or something like that will come from non-operational sources of cash. The next one is non-operational uses of cash, which is another fancy way to say debt repayment, and we also put draws in there. So non-operational uses of cash, really, if you are a sole proprietor or partnership, then the money you pay yourself to live is going to come out of what's called a draw, which is non-operational uses of cash. The next one is operating income, which is right here. The operating income is really important because it is essentially like here we have different farmers markets. We have a Ukiah farmers markets, Willits farmers markets, Santa Rosa farmers markets, and then restaurant. So basically all income that you get from your farm operations. Now you can be creative with that. For instance, you could put in operating income, weddings, or anything that you do on the farm that's getting money essentially for your cash flow. You can be pretty creative with this. And so farmers markets, restaurants, wholesalers, some people will have a big list on here. Will have every single wholesaler that they want to do. Some people do less detailed on this particular sheet and put those specific lists somewhere else. So the next one is operating expenditures, which is right here. And again, as we stated before, and I'll show you this later on, operating expenditures are things you have to buy more of every year. Okay. Capital expenditures on the end, which you can't see on this sheet, is tractors, fences, and multi-year investments. There's another tab for capital expenditures, and those are things you buy once and then you get to use it for many years. Now, on this sheet, there are on the business checking account, we'll actually go into that later. So we're going to get into the business checking account, but essentially the main thing you should remember for the sake of this particular spreadsheet, and other people I've been working with are using a slightly different one with different color cells, but essentially the philosophy is the same in that you will enter onto yellow cells and yellow cells alone. Okay, all of the green cells and all of the gray cells, all of the green and the gray cells auto-populate. So the reason to use this is you can just plug in each one of your income and expenses, and it will auto-populate and tell you in the end whether you're making any money. Now, the two most important numbers here are in the blue: net cash flow from operations, and note change in beginning to ending cash. And we'll go into these. But these are your two, essentially you're doing this whole spreadsheet to figure out these two numbers. Net cash flow from operations is what you're going to earn at the end of the year, whether you're above or below. You don't want this number in brackets. Brackets mean negative symbols. So just so you know, all numbers that are in brackets are negative numbers. So keep that in mind as well. And then note change in ending to beginning cash is right here, which is, in this particular case, with this example, this individual is going to lose $3,000 that year. However, they have a lot of capital expenditures, so it might be okay for year 2 and year 3. We're going to do a short on questions. We're going to do like probably 3 questions, and then we're going to move on, and then I'll email you guys later. You guys can email me as well.
All right. So the first question we have is from Chait, and he asks, under labor on farm and labor on market, would you use those numbers even if the farmer is the one doing it, not actually hiring outside the farm?
Hey Chait, how's it going? We've worked together. It's great to hear you at the webinar. I'm going to just read it under on farm labor market. Would you use those numbers even if the farmer is the one doing it, not actually hiring outside the farm? The main thing is with this is you want to pay yourself, right? So in the draw section, so if you're a sole proprietor and if you're a sole proprietor or partnership, right, your money is going to come out of the draw, your personal money. So if you draw yourself what you need for the month on this per month, then when you go down to the non-labor expenditures for labor regarding the market or the farm, if you're paying yourself the draw, then you do not pay yourself more for the labor that you do on the operating expenditures for the farm. If you are a LLC or corporation, then you will not do a draw. Then you will actually pay yourself the same way that you would pay an employee, where that would come out of the operating expenditures. And we can email me about that too. Again, it's nice to hear from you, Chait.
All right. Second question comes from Chris P. And his question is, in regards to operational versus capital expenditures, which would you consider purchase of mammalian breeding stock, cattle, swine, sheep, etc., as they have useful lifespans of 5+ years?
That is a really, really good one. Basically, I'm trying to develop, and the original creator of this spreadsheet, this woman named Poppy Davis, and we spoke specifically about this. There are, let's see, it's almost a capital expenditure, but it, I guess, changes from year to year. We're actually working on a multi-year cash flow specifically for that purpose. I would say this cash flow in its current context, I would actually put a completely different section for that personally. I would not put it as operating or capital. I would make my own section for something like that, because it's a living thing essentially. But we should actually continue to email about that, because I'm working on a cash flow designed for for that essentially lifespan of cattle and livestock. So that's a really great question. Email me so I can remember to work on it, because I can get back to you on that one. This one is mostly designed, originally it was designed with a year-to-year vegetable operation, and it also works for anything that happens that year. Chicken operation might as well. Okay, last question.
All right, last question is from Norm, and he asks, are those liability insurance values actual?
Those liability insurance numbers are examples. It's going to be different for every operation. It's going to be different for different locations. Even different companies have different deals on it. So that's something you're going to have to get that's something you're going to have to go with on your own and find that information. And the whole concept of this, there are numbers in here. The reason why there are example numbers in here is for you to figure out how it works. And these numbers probably are not that far from reality. However, this stuff changes, and you're going to have to find out your own information and seek out what price is actually in there. So that's definitely an example. Don't take these numbers for gospel. These are examples. Okay. Questions. We got the questions done. Wonderful. All right. Let's get started. Please open your spreadsheets or follow along with my PowerPoint. The main thing is only input data in the yellow cells. Only input data in the yellow cells. Unless you are into fixing the equations and stuff like that, I would just, for now, for this spreadsheet, only input data in the yellow cells. All other cells will populate automatically. All other cells will populate automatically. Only input data in the yellow cells. Bam. Look, it says it again. Only enter data in yellow cells. Now we're going to start. Here we go. So as you can see, we have the savings account, business checking account, non-operational sources of cash, borrowing, non-operational uses of cash, operating income, and then basically this is a larger one that we had before. And so the savings account, right, is basically probably the only one that's actually trickier. And so you will give yourself, start with an opening balance in your savings account, how much you have in your savings account, and then you're going to decide. Then you're going to decide how much money you're going to contribute. So there's your opening balance, and you're going to decide how much money you're going to contribute to your business checking. And so you take that $10,000 and then you enter it in the business checking. If you don't have any money in your savings account, for this sake, you can say zero, and that's okay, but you're going to have to borrow more money. So this checking account, everything auto-populates into your business checking account. And again, the most important parts of it are the year's total, right? There's operating income right here, and so that's the money that you totally got from farmers markets and wholesalers, everything that you made off the farm. Excuse me. And then operating expenditures, which is all of your operating expenditures, which comes out in this case to $57,000. So the operating income is $68,500 on this one, and the operating expenditures are $57,005. So the result is $11,495. So as you can see, you feel pretty good because there's a net cash flow from operations. However, there's also non-operational uses of cash, which is also what I would call capital expenditures, and that's your tractors, your fencing, stuff like that, right? And so that has come out to $54,375. So basically, in the end, you made $11,000, right, out of your operational, but then you had to borrow money in order to get that there's that $54,375, which is your capital expenditures, your tractors and stuff like that. So no matter what you do, if you make $11,000 and then you still have to pay $54,000 in operating expenditures, then, in capital expenditures, then you're still going to it's still going to look like you're in the hole, and you will be in the hole that year one. But this is actually an okay cash flow because I can tell, even though you have a lot of capital expenditures, you are making money that year. You're making $11,000. Hold on one second. Technical sound. I had to cut that. I had to cut your.
Oh, it was on.
All right, I'm back. So we'll go into that deeper. Contribution from savings explained. This is your contribution from savings explained. The opening balance is the balance in your savings account. Step 1, decide how much you want to contribute by putting that number in brackets below contribution to business checking account. This will automatically subtract to get the total amount of money left in your savings account. So you have decided you have $10,500 and you have decided that you want to put $10,000 into your business checking in order to help get your farm going, right? So these are the only two numbers you fill in, and so $10,500 in brackets minus $10,000 equals $500. Now after you put that $10,000 in brackets, you bring it all the way down to the business checking account, which is the larger the larger area, the business checking account, and it'll say beginning cash in checking. And all you do is enter that $10,000 in the beginning cash in checking, and those numbers will auto-populate throughout the checking, and that money will go into your business. It's simple as that. Checking explain. The checking tab is the master list and the center of the operation. This is where expenditures are all automatically populated. All you have to do is manually enter your beginning cash and checking. That would be this beginning cash and checking is that $10,000 you pulled from your savings account. That's the only thing you have to manually enter in the business checking tab. Everything else is auto-populated from all the other expenses you have. So as you can see, we have operating income, operating expenditures, net cash flow from operations, cash from borrowing, subtotal for the cash available, and then non-operational uses of cash, which comes out to capital expenditures. Non-operational sources of cash is borrowing. This is a representation of all loans made. This includes loans from family members and friends as well as formal institutions. I want to talk about loaning from family members and friends. Even though sometimes it feels like it's kind of informal, the way I see it, loaning from a family member or friends is actually a bigger deal than loaning from the bank. Because if you don't pay back your family member or friend, if you don't pay back your uncle or mother or aunt or whatever back, she's going to be there, and you're going to get reminded of this fact for absolutely the rest of your life. A bank will is only going to bother you, for so long until you pay it off, and then you don't have to talk to the bank anymore. But you will have to talk to your family members forever. So when you make loans from family members, I recommend recording it. Record exactly how much loans you're making, record exactly from who, and figure out a plan and record when you pay them back as well. You may need to separate operating loans and capital loans. That's a big thing. In fact, you will need to separate operating loans and capital loans. So an operating loan is a loan that you have to pay back that year. Okay, fertilizers, feed, that kind of thing. A capital loan usually has a 7-year term, where you pay back over 7 years. For instance, we bought all our tractors on capital loans, but we bought our drip tape in operating loans. The reason why, this is a really important thing that I want you guys to remember, is that you don't want to make a capital loan, a 7-year loan, and buy operational things like feed or fertilizer with a 7-year loan. The reason why is because if you buy that item with a 7-year loan, then you're going to be paying that item back 7 years or 6 years after you used that item. So if you buy feed with your capital loan, then you're going to be paying for that feed back with interest for 7 years, even though the chicken ate it and pooped it out 6 years ago. So remember that the difference between capital and operating loan. Operating loan, you have to pay back that year. And so remember that when you make an operating loan and you have to pay it back that year, it's something to remember. Non-operational uses of cash, right, is draws and debt repayment. So non-operational sources of cash is the idea of loans, right? Non-operational uses of cash comes out to the draw is the money the owner takes out for living expenses when you find out this is when you find out if you make enough money to survive. Other necessary personal expenses, the same as draw. Contribution to savings, this is where you pay yourself back for contribution from savings. FSA loans repayment is where you pay back for the FSA loans and other loan payments. So this is where, by the way, if you guys are confused with non-operational uses of cash and capital expenditures, we'll talk about that. I'll show you that, and so there'll be no confusion on that one. But non-operational uses of cash, this is when you're going to pay yourself back, and this on your balance sheet will come as a negative number. So it'll come up on your checking account as a negative number, because this is all things you're either contributing to savings, and the contribution to savings will also comes a negative on your checking account, but it will automatically auto-populate back into your savings account that you drew $10,000 from. So keep in mind, so that's where that goes. Fixed loan payment. Oftentimes, the fixed loan payment is your example of paying yourself back for a capital loan. Fixed loan payment would be a car payment. Fixed loan payment would be anything you're paying month by month on. Asset purchase. That's essentially, asset purchase is, essentially if you buy something cash. If you buy, a large, you buy a tractor cash, or your down payment on a tractor. If you put $4,000 down on a down payment, you'd put that here, and then you would start paying that $500 a month for it. And draw is very important. The draw, if you are, again, a partnership, which most of you will probably be sole proprietors or partnership, although it's highly recommended that you become a limited liability corporation for liability reasons. But assuming you're a partnership or sole proprietor, you will make that draw out of this section. And so this particular farmer is drawing $1,000 a month, and then once the season picks up, they're bumping it up to $1,500 a month. To an all, they're drawing $14,500 for personal expenses and personal survival. Hopefully, at the end, you can still make a little profit to put toward, just rewarding yourself financially. So to keep in mind, that's not always. If you make profit at the end of the year, you might be able to do something with that. Most of the time, that profit goes back into the business, though. Operating income is something I am actually going to pull up. Operating income. Here we are. I hope everybody can see this. I'll make it go closer. So, operating income, this example is, in this case, Ukiah Farmers Markets, Willits Farmers Markets, Santa Rosa Farmers Markets, and a restaurant account, right? And so this, you just go month by month. How much are you making for the month of this particular So in this particular month, which would be, let's see, August, right? In August, this individual is planning on making $5,000 from the Ukiah Farmers Market. Now, as you can see, $5,000, if I put that at zero, if they're not making any money, as you can see, it drops your operating income from, I guess, $82,000 down to $77,000. And that $77,000 will come as right here, the year's total, so it auto-populates in here, so you have a little bit less money. You've basically made a little bit less money by doing that. So let's keep them making money. So that is your operating income. It's important to be realistic when choosing those numbers. When you go to the operating income, when you're trying to decide, it can be difficult when it's your first year. But assume that, like out here, most farmers markets, we're assuming that we're going to make, $650 or $700, hopefully $700 to $1,000 for farmers markets, and then, of course, that times 4 weeks, in this case right here, would be $4,000. My whole point is, do your research when you try to figure this out. Try to figure out how much time it's going to take you to get there, and you want to put that in your labor, and you want to calculate all of this stuff when coming into it. Now, when you calculate your labor, you're not going to pull it out of the actual farmers market total. You would put it, you pull it out of operating expenditures, which would be labor and market, one person times $10 an hour. So this individual farmer said it would be $600 a month for all labor. You want to keep that farmers market pure if you can, essentially. So what I was gonna talk about was maybe I caused some confusion and called it non-operational. What I meant to say was the final is equipment and other long-term assets, and that equipment is 50 horsepower tractor, 5 foot rototiller. Basically, this is a simplified version of something that, as long as you get the equations right, you can add as many tabs as you need in order to do this. This is a very simplified version of equipment and long-term assets. I eventually realized that there's no point in me trying to guess exactly what your equipment is going to be, that you can best decide your farm and what long-term assets you need. And back to the PowerPoint. Operating income, slideshow, play from current slide. All right. So we kind of figured out operating income, and I want you to take a look at this beautiful little kitten and bunny. Just take a minute, take a breath. Okay, that is just adorable, I must say. Okay, operating. Okay, operating expenditures. We've really kind of talked a lot about operating expenditures, and just remember, you want to keep those down if you can. The greatest measure, I think, of whether a company is going to be solvent or not, or a farm is really going to work, has to do with having a greater operating income than operating expenditures. Capital expenditures, you kind of pay, basically it's how much debt you can take for capital expenditures. But remember, operating expenditures is pretty important. So be conservative with your expectations with operating. Also, as you do projected, so as you do a projected idea of operating expenditures, you kind of want to overestimate your expenses and underestimate your income a little bit. You still want to get to the point where you make some money, but just keep your expectations at a point. So, I mean, if you think you're going to make $800,000 your first year farming, on 3 acres, then there might be something unrealistic, and you might have to really get back to your numbers. Okay. So here's an example of operating expenditures. There's a little close-up of it. So farming, let's see. So farming, labor on farm, we talked a little bit about the labor on farm for operating expenditures. There's only one person at $10 an hour. Obviously, in California, you're going to be paying. There's nobody you can really hire for $10 an hour, and so it's going to be kind of expensive out here in California, but you guys might be able to hire, out across the country, you might still be able to hire people for $10 an hour. And so this is a month total. So remember, all these are months total: January, February, March, April, May, June, July, August. Labor at market, again, that's an important thing to think about. We talked a little bit about that. Payroll tax and insurance, look, this is estimated at 20%. And so that's essentially 20% of everything, which is pretty decent thing to think about, and you have to, and those expenses really do add up. Rent, if you are making a mortgage, you could replace, for the sake of your cash flow, obviously there's all kinds of reasons to put these expenses in different places that your accountants will tell you in terms of taxation, but specifically you trying to find out how much money you're going to make out of this thing, if you're paying a mortgage, I would go ahead and put that in as rent. Utilities, same thing. These are all things that you're going to pay every year: gasoline, auto maintenance, tractor maintenance, soil tests, seed amendments, marketing, organic certification, how much you have to pay, that, $800 in this particular case, plastic shopping bags, farmers markets, administration, bookkeeping, that's something, it is an expense. Bookkeeping is an expense, and it's something you can't really ignore. Otherwise, it will bite you, and the next thing you know, you're going to walk into your accountant with a stack full of crumpled up receipts, and they're going to charge you an arm and length, and they'd be happy to sort all that stuff out for you. Liability insurance, auto insurance, it's all there, and it's all things you have to think about. And there could be more operating expenditures that I don't see, or there could be certain expenditures on here that you don't have to use. So you don't have to put in numbers for every single one if that's an expenditure you don't necessarily have to do. Another thing, just another example, it can help to stagger out the cost cost of supplies to prevent too much upfront costs early in the season. Typically, you're not going to have very much money early in the season, but you're going to have more money later on after things grow and you start actually selling. Again, this is the time to record every dollar you spend for operational side of the business. Do sweat the small stuff. If you can save $100 a month, that can be huge. If you have realistic income generation and expense expectations, you should not be afraid to make loans and borrow. But to give you a true example of the difference between operating and capital expenditures, or operating and long-term assets, is this mouse, all the food that goes into paying this mouse to run this little mouse treadmill. All the food is an operating expenditure, the water, the light, essentially, to give him enough so he can see enough to run the thing. That's an operating expense. The cage itself, purchasing the cage, that is what I would consider more of a capital expenditure. The cage, the round circle thing, and the room is there. The actual cost of the lights themselves would be more like a capital expenditure. So that's not even the difference between operating capital. The rat or mouse, whatever it is operating, and the treadmill is the capital. Equipment and other long-term assets. This is something that I want you guys to remember. And the equipment and other long-term assets is I personally like to call it capital. Here, I don't have to spend capital. I'll abbreviate that. This is what I like to call capital, and that's when we talked about the equipment, the stuff that's going to stick around for a while. The cargo van, the digital scale that should last a few years, the Easy Up, hopefully it's going to last a few years, long enough to really call it a capital expenditure. Year one will be one of your most expensive years. If you have taken out a loan for a tractor or other equipment, list the monthly payments, and you can actually list some monthly payments in the loan repayment category. Try to keep capital and debt and operating debt separate. Do not purchase fertilizer and twist ties with money that you borrowed for equipment unless you want to spend 7 years paying for twist ties with interest. Remember that, because a lot of farmers make that mistake. I certainly have, cut corners and made that mistake, and I have regretted it, as I was still paying for twist ties a year ago. How to find out how much money you need for a loan. And I'm going to go through the steps, and I'm going to knock it out. So step 1. Fill in projected income. Step 2, fill in all capital and operating expense sheets. Step 3, go to checking, observe how much money you'll make at the end of the year and how much money you will need at the beginning of the year. Negative numbers will be in brackets. Step 4. If you are unable to turn a profit at the end of the year, but are in the negative at the beginning of the year, you can either loan yourself money by drawing from your contribution from savings, or ask for a loan from the FSA or other lender. So FSA or other lender comes out to, there's FSA, Farm Credit, there's a lot of lenders out there. You're going to research. And there's also mom or grandma, if you're lucky enough to still have them around. Step 5, add the amount of money required to the non-operational sources of income tab, FSA or other loans. I'm going to do it because it'll be a lot easier if I just do it for you guys right now. You can see it. Keep. Okay. So, what we are talking about is your ending balance. Look at your ending balance. Hold on one second. All right. So, your ending balance for the month of January is in brackets. Notice the 905. In February, it's in brackets as well. So is March, April, May. Notice all these numbers are in brackets, but then August, September, October, November, December, they're not in brackets. They're positive numbers. That's because the money from the the money from farmers markets and things like that are essentially kicking in. So what I want you to do is make an operating loan. So in January, if it says brackets $905, you're in the hole, then you know you need to loan $905 to even it out. So bam, notice in January, the ending balance is now a dash or zero. And so February, it's now to 4405. It's the same thing. So February, you put in 4405, and bam, February is now even, now zeroed out. March, do the same thing. Now it's down to 4325. So March is now zeroed out. So 2765 for the next one. And just keep going. Like so. And what you now see is that it's all positive numbers from July, October, November, December till December, and you don't have any negative brackets on ending balance. Now what you have here is non-operational sources of cash and borrowing, and as you go, 905, 4,405, 4,325, all of these numbers, right, are the amount of money you need to loan for each beginning month. And so that comes out to $15,670, and that bumps up to cash from borrowing $15,670. So this is the amount of money you need. The $15,670 is the amount of money that you need to borrow in order to make your operation work. Okay, so hopefully you guys got on your spreadsheets and played with that a little bit. So hopefully you guys did that. All right. So next step. And we'll go into questions about that later on. That is really the most important thing to figure out. So after you have figured that out, that you need to loan $15,670, and that would be an operating loan. Somewhere in that number, you need to pay that loan back if it's an operating loan. And so where you would pay that back is down to other loan payments, right? And notice we have kind of a number right here. So where you pay back that is other loan payments. I would put it right here. Let's say in December, you decide to pay it back. So 15670. And bam. Notice all these outside lines zero out. And so you still have your $25,000 net income, and you have made it through. Notice it's all zeroed out here. So you've made it through the beginning of the year without any problems, and you've been able to pay back your operating loan. So this is a good situation, I would say. And you know, when you walk into the bank from this, you know for a fact that you need $15,670 in order to get your operation started. Again, we're going to take questions, and you can email me, and we can talk about this in depth. But the whole purpose of this is finding out how much money you need to get started early on in the year, and then finding out if you're going to make money on it. Because we want to, all in all, this is a business, and we want to make a little bit of money. Because while it's a beautiful business, and a lot of us would do it for free if we needed to, I don't think a lot of us have to do this for free. I don't think there's no rule against making money farming, and I want to get that into everybody's head. Uh, there we go. Okay. So basically what we did, I'll just go over it one more time. What we just did was go month by month to fix all numbers in the negative. Once a month is in the positive, there is no reason to loan money. The loan amounts will add up and you'll obtain the amount of money you need to borrow. Make sure you can pay back your operating loan at the end of the year, essentially. So again, here's our non-operating, here's an example again. So we have a number in brackets, and then on somewhere on the loans, we would put that 8180 right here into the non-operational sources of cash. Okay, loan payments, the same thing, and I'm just going to go over this again so people know what I did. After we put a lot of money into this to the loan section, we now have to pay it back somehow, some way in the loan payments, and that's where that goes. Sometimes an operating loan, I'll pay in one big lump sum at the end of the year. That's usually, honestly, what I usually do. Is I will loan $40,000 or $50,000 from Farm Credit West in order to get through these early months right here. I'll loan $40,000 or $50,000 to get through and pay people and stuff like that, and then I will slap that $50,000 in the end here and decide in December or October, October, November, December, somewhere in there, I will decide to pay the whole thing back in one lump sum. And so that's why I have a pretty gosh darn good credit score, if I don't say so myself. Because you start making a lot of big time operating loans when a bank trusts you with $60,000 or $70,000 cash or line of credit, then at that point your credit score will just start looking pretty good after you start doing that kind of stuff. So, in conclusion, I would say brackets are bad. Try not to be in the negative when it comes to your cash flow from operations. Make sure your operating income is greater than your operating expenditures. I can't say that. I'll read it one more time. Make sure your operating income is greater than operating expenditures. Use long-term debt for capital expenditures and not operating expenditures. Please don't forget to pay yourself. That's a huge. I just got to circle that one. Don't forget to pay yourself. It's not going to work if you're working for nothing. You need to eat. You need to go to the movies once in a while, and maybe even get a gym membership or have hobbies. Next, sweat the small stuff. When it comes to expenses, please sweat the small stuff. Get into your expenses. Get deep into it. Find out where you can save money. If you have 100 line items and you save $100 each, that 100 times 100. Evan, what's 100 times 100? I can't remember. Moderator, what's 100 times 100? It's a lot of money, like $10,000. So remember that. And then I have a link to the cash flow spreadsheet. This is actually a great website that has quite a few things for beginning farmers and just farmers in general in terms of doing cash flow websites. So get on this link, check it out, especially if you lose the materials once this webinar stops. You can find the materials at this particular website. I want to do a special thanks to Poppy Davis, who's worked with farmers to create this wonderful spreadsheet. I've used it for my farm. She is the mastermind behind this. She's a wonderful person, and she's just great. And I'm sure you can see her eco farm or wherever she happens to be. So thank you, Poppy, for making all of this this possible. And this spreadsheet has helped probably thousands of farmers now, maybe more. And now, questions. The main thing is you can send me questions by email, mattmccue@farmvetco.org, and we can take a few questions now if we want to.
All right. First question is from Kristen F., and she asks, is the bookkeeping expense an amount that you should be paying yourself or professional?
My wife has been doing some bookkeeping for people. There's things like right now, the best program out there as far as like computer program for bookkeeping is QuickBooks. right? And QuickBooks are kind of getting it set up. You want to get your QuickBooks set up right. I would suggest in your first couple of years hiring, or at least your first year, spending a little bit of money on a good bookkeeper to help you get your QuickBooks program set up that you can put your own expenses into it when it comes to bookkeeping. The bigger you are, the more, especially the more complicated your operation is, the greater need there is for bookkeepers.
All right. Second question is, do you calculate depreciation on capital assets as an expense?
For the sake of this cash flow spreadsheet, I am not putting depreciation into it for simplicity factors. When it comes to serious accounting, and again, this is, you could do that. I'm not going into that today because it would take a lot longer. And getting this cash flow going, you don't have to put depreciation as an expense in order to cash flow. You're talking about paying taxes, you want to consult an accountant who's going to talk to you and get your depreciation where you want to go.
All right, next question is from Tammy, and she says, if the contribution to business checking was $9,500, wouldn't beginning cash in checking also be $9,500 rather than $10,000?
Okay, that is a good question, and I will go back to this to do that. So your question was, I like that question. If your contribution, if your contribution to business checking were $9,500, wouldn't beginning cash and checking also be $9,500 rather than $10,000? That is correct. In this case, as you can see, because we pulled out $10,000 from our savings account, we put $10,000 into our beginning cash and checking. If you're, oh yes, there was a slight mistake on that particular, on that. I want you guys to look at your Excel sheet, and where it says $9,500 on your Excel sheet, go ahead and put $10,000 into it. But really, those are example numbers. You're going to do that yourself. But you're absolutely correct. You guys should definitely fix that. That was a glitch in the in that particular spreadsheet that is all across the world internet. So yes, that is $10,000. I actually asked Poppy that very same question a couple days ago.
All right, next question is from William, and he asks, do you usually opt to pay capital investment loans back monthly or in lump sums later in the season when there is more income?
I like to have the option to pay capital, like the way we have it with our bank. Well, we paid off everything, but we have a monthly payment for our capital expenditures, our capital assets. And then if we want to put in a few $1,000s more at the end of the year, if we make a little money, we have that option to put it down, to pay it down at whatever speed we want. But the minimum we can pay down is our monthly payment. Like we pay, it's very, very common to have a situation where you can pay off the equipment anytime you want, anytime you have the money. That's it. Is that a... okay, and this is it. Okay, now I'm going to go to the end of the deck. Oh gosh, wait a minute. I'm sorry. Oh, look at that. All right, moving down to the end of the deck. I just love those kittens. Questions? Also, Wednesday, March 22nd, 11 a.m. to 12 p.m. There's a employer, RCIS, who's looking to maybe get people some jobs. So that rocks. So they're doing a webinar on that. Check it out. Yeah, thank you guys very much. is really supportive. Any questions you guys have, please, let's talk. We'll talk it out. Any questions about the spreadsheet? That was really good on that the $10,000 for the $9,500. That's a big one. So that's good to do. And here's your link to the cash flow spreadsheet. Use it, love it, become a part of it. There was a movie called Pi where a guy learned the numbers so much that he started being able to predict the future, but he couldn't handle it, so he put a drill to his head. But that's a whole different movie. That won't happen to you. You're going to predict a beautiful future for your farm and follow the numbers. They can make your dreams come true. If you really follow the numbers and do it right, you're going to be in a good position. Thank you so much.
And just a couple last things. Thank you for everybody for joining us. We will get the slides and the recording of this webinar posted to the FVC website at farmervetco.org. And that concludes the 3-part series. And stay tuned for future webinars. Thanks everybody for joining us.
It's been real.